The current low levels of inflation are largely driven by the decline in food prices to a good domestic harvest, lower global inflation, and the decline in crude oil prices. Annual consumer price inflation maintained its downward trend, averaging at 1.7% in the 3 months to January 2015, down from 2% in the 3 months to October 2014. This is conditioned on the pickup in real economic activity over the last 6 months of 2014.
Annual core inflation remained stable at 2.7%, the same level as in the previous month. Growth in 2014-15 is supported by increased public investment and the recovery of the private sector credit, which in turn boosts private investment and consumption.
However, Uganda's economy has been strained by the sharp depreciation of the exchange rate, which occurred in January 2015.
The lower global oil prices and domestic food crop prices, to the extent that they persist during 2015, will dampen inflationary pressures. Taking into account of these developments and the projected strength of economic activity in 2015, the Bank of Uganda forecasts indicate that core inflation will gradually rise to a range of 4 to 6% over the next 12 months.
Additionally, the economy remains under great risk because of both external and internal factors like the widening trade deficit.
The possibility that investments in the oil sector will be delayed given the fall in global oil prices, possible volatility in global financial markets, and an acceleration of domestic demand growth beyond what is currently projected.
The central bank reports that growth in 2014 and 2015 is supported by increased public investment and the recovery of private sector credit, which in turn boosts private investment and consumption. Anita Mwangazi, WBS News in Kampala.